Welcome back. This may be one of the most important sections we do in this entire foundations course. This might be the one. They all have their place, but if you don't understand this particular training and knowing your costs, the rest of it, not that it's not important, because it is, but this is paramount. If you don't do anything else, do this. This is another way of saying it. Okay. There are overhead costs. Overhead costs are also called fixed costs. Yeah, there's a lot of terms that all fit. Overhead, fixed. These are costs that you must pay before you even start your truck, whether you start your truck or not. They are costs that are overhead. They are over the entire business and are irrelevant if you are operating or not. They are things like equipment payments, insurance, registrations, business licenses, etc. This is not an exhaustive list. This is not an all-encompassing exhaustive list. These are just some examples. Equipment payments. The bank wants paid whether you're trucking or not. They don't care. And on down the list is the same sort of relationship. So in this example, our overhead or our indirect costs are a little over $4,000. Again, just an example and not all inclusive. The other kind of costs are your variable costs. Overhead costs are everything that happens no matter what. Variable costs or direct costs are incurred with each additional unit of production, they call it. And in our business, that would be a mile or a job or whatever. So they are things like fuel. Fuel depends 100% on how many miles, type of equipment, type of driver, quality of equipment, all those things. It's dependent upon how much you run the truck, depends on what your costs are. Your truck payments are the same no matter what. Your fuel depends on a lot of factors. So does your driver pay. If they're on salary, maybe not. Repairs. Depends. Just depends. If it's sitting out there, it's not breaking down anymore. It is. Things are wearing out even if they're not being used, but it's much different than if it's running. Tires, again, they will rot into the dirt eventually, but it is dependent on all of the other factors. And again, I just wrote some numbers down, and we're doing this example on a monthly basis. So use your numbers and plug them in. So the total variable or direct costs are $16,200. So now we just ran the same month for the last example with my overhead costs, which were a little bit over $4,000. My variable or my direct costs are a little over 16,000. So we're talking 21 grand-ish to operate this truck for the month. Each month is going to be different. Each week is going to be different. And so you have what's called your cost of operation. We're basically going to take all of our costs and add them together. And then we'll divide that by an amount of time that you want to manage your business by. Personally, I always liked it. I like weekly settlements. I like weekly. That's how I manage, is on a weekly basis. Of course, I'm looking at my monthly and quarterly and annual numbers, but I'm managing on a weekly basis. That's a personal preference. It all depends on all the things that you have going on. So if we have our direct costs from that example, 16.2, our overhead costs for the month, 41.35. That means our operational costs are 20,335. Again, as an example, use your own numbers, don't use mine. So then you just need to decide, how often do you want to manage it? How often do you want to check in and see? Same question. How often do you want to manage your cash flow? By the month, by the week, or by the day? So all we did is just divided our 20,335 divided by whatever time period I want to manage by. If you want to think on a daily basis, you need to go, that truck needs to go make $678 every day. Again, depends 100% on your direct costs and all the factors that affect it. That might be $620 one day and $780 the next day. We'll come back to that. We'll come back to that line of thinking. Cost per mile. The industry standard is always talking about and calculating. They quote your rates based on $1 per mile rate. Now your cost per mile changes with each additional mile. Each mile you go further, and your any additional costs. Okay. An example is, if you suddenly get a flat tire on the road, you have to do a road call. Maybe it'll cost you around $750. So then, now that I have that expense, now how many miles should I divide this number by suddenly? Like, I have this cost that just showed up, and I did my calculations on this load based on what I thought my dollars per mile, cost per mile would be. And now, like, do I assign this tire just to this load, or do I, obviously the tire will last longer than just this load. So it gets really confusing, is my point. I'm trying to confuse you on purpose. Same example as before. If we have a slower week and we just didn't drive as many miles, but our overhead costs are the same no matter what. So our dollars per mile will have to make up more next week in income, because we had a slower week this week, or we just don't make as much this week, or depending on just how the math goes. You know, let's just say that you and your truck, maybe you're broke down, or maybe you're just sitting at the house, and you go 1 mile for the month, but you still have to pay your overhead costs. So if you want to think about it this way, your cost per mile is $4,135 a mile. So that doesn't really make a lot of sense. Again, now if you go 2 miles, then you can divide that number by 2. Now it's only $2,000 a mile. If you go 4 miles, now all of a sudden we're at $1,000 a mile. Boy, we're making money now, right? Point is, don't get hung up on this dollar per mile number. I don't use it, and most of the people I know who are successful don't really use it either. It's good to calculate, it's good to know and keep it in perspective, but understand what it is. It is a past calculation of the past that you can use to make calculations for the future, to make predictions for the future. Like the example with the tire. How many miles do I add this up? How many do I give it? How many can I assign it? Now, it will just become a bookkeeping nightmare if you want to try to keep this cost per mile 100% accurate every single day, every single mile. It just won't work. So all dollar per mile cost is looking backwards so that you can forecast forwards. I would suggest, if you're doing the same type of work, you can take the number from the past and kind of use it for going forward. It's basically kind of like a benchmark. It's just sort of a rough guide. At a glance, you can know right where you're at. If you're all in costs for the last, who knows, 6 months, 1 year, 6 years, I don't care. And let's say fuel has stayed relatively stable. Fuel cost, fuel price at the pump has stayed relatively level. It hasn't. I know that. But let's, for this example, then it's okay to really use your numbers on this, on your cost per mile, and then you can calculate your profit off of that. Otherwise, you can't do it like that. You have to do it off your cost of operations and then move forward like that. Now, to track these costs, because you need to be able to build and spit out any one of these numbers basically at any time. You can use a budgeting app, QuickBooks, online or on your phone. You can use a spreadsheet if that's how you like to do it. Even just a notebook. Are they assigned to overhead costs? Or are they assigned to direct costs? It doesn't really matter as long as you do it. You have to know your numbers 100% if you don't do anything else in this entire training or in your entire business, but understand your costs. If you don't do anything else, do this, please. It's for your benefit, not mine. Now, this is just an example. This is one of my spreadsheets off of I just pulled it off of one truck. I did change a few numbers because they didn't really make sense. It was a really special situation. But basically, in the green, I like to manage on a weekly basis. What did that truck make that week? And then I take out all the costs, which for my business, the one I just sold, I start businesses and I sell them. It's funny, you get doing stuff, you get going, start making money, and people start wanting to get on board and start to be partners and all this stuff, and I'd rather just sell it. So that's what I do. So anyways, my fuel costs, maintenance, repairs, and my driver are what I assign as direct costs. So you can see that first line. My weekly income for that week. Oh yeah, that was this year. That was this first quarter of this year, 23. $6,300. Add up my direct cost. My direct cost total $3,290. Okay, which just means my income minus my direct cost means my gross margin is $3,000. Now I have to minus my overhead costs, and again, I calculate that based on a weekly basis. So that means my weekly P&L for this one truck, was $1,976. But if you notice that the next week, income was down, but fuel was up. It was it was a different sort of a load, and things just didn't quite work out the way the math worked out. We ran through the weekend, so we had the fuel cost on Friday, but didn't have the income until the next week. And those are what happens. That's what happens. So that number looks a little weird. So if you look over at my weekly P&L, I only made $151, but I kind of made it up the next week. And then we had some repair stuff. So then we're kind of back. We were negative the next week, negative the next 2 weeks in a row. But that's how this business goes. That's what this business is. But you have to understand, I don't care how you do it. You can do it like this. You can do it just in a notebook. You can, I'd be a little careful with like QuickBooks and those sort of things. Those are really designed for your accountant to do your taxes. And management, which is you, management of a company generally needs different sets of numbers to look at. Not that you can't do it in any of those apps, any of those programs. If you know where to look and where to input, and you can do it, like it's fine. However you want to do it is fine, but do it is the point. So the homework this week is to find and budget your indirect or your overhead costs. Find them, get them all laid out. What are the bills that have to get paid, whether I'm trucking or not? And then I want you to do it with your variable costs or your direct costs. All these terms are interchangeable. It might be a little confusing once in a while, but different accountants use different numbers, and I'm going to use them interchangeably because I want you to kind of get an overall picture of what. So if I use all the terms, and then when you hear the term in the future, you'll hopefully at least have a vague idea of what somebody's talking about. So what method are you using now, and or what method are you going to start using to start tracking your costs? You have to. You just have to. And then I want you to just start doing it in your, whether it's monthly, weekly, daily, whatever. If you do it daily, obviously you probably won't have income every day. You might, but I would simplify it a lot. I wouldn't say, so if I'm on a multiple day run, I wouldn't divide it by the number of days it takes me to do the run, and that's how much I made each day. I would track on a weekly or monthly basis. I wouldn't do a day, but it's good to know kind of what kind of costs you have to cover every day. If you are sitting, let's say there's some cheap freight somewhere, you got yourself in a bind, and you're somewhere in the country that freight's not moving out at a very good rate, and you're there and you just know that like in this example, your costs are $670 a day. It might make sense to just take the cheap freight, get the hell out of there, and don't get caught in there again, or other places like that again. Be really careful about rates and keeping yourself, do some planning. Don't just take any old load you can find, and do things on purpose. Don't do things on accident and let things happen to you. Okay, know your costs, figure them out, do them. Overhead costs, direct costs, get them figured out. Okay, see you on the next one.